You want to buy a property in Belgium, it can be intimidating and there's much more to consider than just the purchase price. Only when you look at the full picture, you will have full control over your investment decision. My name is Emil from SimuVista, and in this video I will show you a simple but a complete way to assess your next property investment, so that you can be confident when buying a house or an apartment in Belgium. You will learn how to bring everything together in one complete overview without you having to be a financial expert to understand. Let me show you how it works. There are 4 building blocks you should take into account. For each block, there are a few simple user inputs that are required. The first block is the initial costs. This includes everything that you pay upfront. The property price, the registration, notary fees, bank-related costs. And it's crucial to understand this block because it shows you how much money is needed upfront. And you will see which factors drive these costs and where you might be able to optimize them. Then the second block is the loan, and here it is important to understand how your interest rate, your loan duration, and your initial down payment affect your monthly repayments and also the total interest that is paid over time. And together with the initial costs, they directly influence your cash flow and your overall profitability over time. Then the third block is the recurrent revenue and costs, and these are your ongoing cash flows. It goes from your rental income towards costs like property taxes, maintenance, insurance, and other regular costs. This block helps to see whether your investment can generate positive cash flow and if it can potentially cover for the monthly loan payments that you make. And then the final block is sale and return. And many investors investing in property forget this step, but it is key for understanding the total long-term outcome, because by estimating what happens when you sell the property, you can see the overall return on your investment considering all 4 blocks together. So once you can make a good guess about the user input parameters, you will be able to see the full picture and what drives your total investment results. And even though each input might belong to a specific block, keep in mind that it can influence the other blocks as well. So the overall impact becomes clear when you look at the 4 blocks together in the dashboard, as it shows how each input affects multiple aspects of the investment. Let's take a closer look now at each of the blocks specifically. The first block is the initial costs, and basically it's everything that you pay upfront before the property is yours. And it's here that you can define key inputs such as the region, which can be Brussels, can be Flanders, can be Wallonia. You also have a parameter to indicate whether it's your first and own residence, yes or no. The purchase type is important. Is it an existing home? Is it a newly built home? Is it a demolition and reconstruction? So let's take newly built home for instance. And also the total purchase price, of course, and the portion that is land price will impact your costs. And it is important because based on these choices, your notary fees and your taxes will automatically adapt. So for example, you might pay registration duties while someone else might fall under the VAT scheme. And the percentage can also vary depending on your specific situation. 2 other inputs that are crucial are your own capital contribution, as the rest will have to be financed. So in this case, if your own capital contributions is 50,000, you will have to finance 300,000 via loan. And also what is important is how much of your mortgage will be covered by a mandate instead of an inscription. And as you adjust these values, the dashboard will instantly update with a full breakdown of the deed, the mortgage inscription, and the mortgage mandate costs. So you can immediately see how regional rules and financing decisions will impact what you pay at the start. For instance, in this case, next to your 50,000 own capital contribution, you will have to pay 84,831 extra costs when purchasing this house. And if you would like to have more details behind all these costs, you can go to this, you can see in this detailed cost tab the full breakdown. The second block is the loan block. and it defines how you finance your property and what your monthly repayments look like. You can enter the loan term, the interest rate, and also whether you prefer a fixed monthly payment or a fixed capital payment. And as soon as you change these inputs, the dashboard shows you how your monthly payment evolves over time and how much goes to interest compared to capital repayments. For example, if you would extend your loan from 20 to 25 years, you will reduce your monthly costs, but you will increase the total interest that you will pay over time. Or if you say you will have a larger own capital contribution, let's take 100,000 here instead of 50,000. Yes. Your initial cost goes up, but your monthly repayments drop significantly. So it's all interconnected, and if you would like to have more details behind the loan, you can see here your monthly schedule, your repayment schedule based on the inputs of the dashboard, both monthly and annually. The third block is the recurrent revenue and costs, and this shows you the ongoing performance of your property. You can decide whether you rent out your property or not, let's say yes. And if so, you can set the initial rental price and the annual indexation that you expect. You can add your estimated recurring costs like your insurance, home insurance, life insurance policy, the duration of your life insurance policy, and also other annual costs which can be indexed as well. And as you fill these in, the dashboard updates automatically and it shows your net yearly revenue, which is your income minus your costs over time. And so ideally you want to compare block 3 with block 2, the loan block, as you would like to have that in any case when you rent out your property, that the net revenue covers or even exceeds your monthly loan payments. If you want to have more details about this block 3, also here you can see the details per year in terms of cost, revenue and the netto revenue over time. Finally, the last block is sale and return, and it gives you the long-term picture. Here you can enter the expected annual property value increase, for instance 2% every year, and you can also indicate a simulated sale after X year, for instance after 15 years. And it is not necessarily that you want to sell after 15 years, but it can also be seen as the horizon over which you want to see your return. You can also indicate, and you should indicate, the costs that are related to a sale, which can be agent fees or taxes, and I estimated them here at 10,000 euros. And once you set these values, the dashboard will automatically estimate the sale price, and it will subtract any remaining loan repayments, and it will show you your net cash flow in the year of sale. So in this case, after 15 years, it's 361,000 net cash flow in year 15. But if you would sell after 10 years, then it would be 264,000. And you can see your total net profit, which would be in this case 43,000 when you sell after 10 years. And you will also see the corresponding annualized return, which in this case would be just below 2%. So you see that here everything is brought together, all 4 blocks. So you have block 1, your upfront costs that are taken into account at T0. You have your loan payments that play a role over time, so your block 2. You also have your ongoing revenues and costs, your block 3, that play a role over time. And then also your final sale will impact your final cash flow here at year 10, which is your block 4 that plays an important role. And also here there are some more details that can be seen, so the different blocks for every year, to see where your total profits and your annualized return is coming from. So as you have just seen, these 4 building blocks are all connected. Together they form the full financial picture of your property investment. If you would like to explore your own scenarios, You can download this Real Estate Planner Excel tool that I just showed on SimuVista.com. It is specifically built for the Belgian markets, and there's also a free version that allows you to simulate your initial costs. Let me know if you would have any suggestions for future videos, and thank you for watching.